34%. That's what the crowd was pricing when $761,000 moved on this contract in 11 minutes after the SEC announcement dropped last Tuesday. On-chain data and ETF flow signals were pointing toward 55%. That gap, 21 percentage points on a contract with nearly $1 million in liquidity, is exactly what this tutorial is about. I'm going to show you the scatter tool that found it, how to read it from scratch, and how to use it even if you've never touched a prediction market before. Let's start from zero. A prediction market is a contract. If a specific event happens, say, the SEC approves a spot BTC ETF this quarter, the yes contract pays $1. If it doesn't, it pays $0. That's the entire mechanic. Right now, that contract might trade at 34 cents. That means the crowd is pricing a 34% probability of approval. Think of it like DeFi price discovery, except instead of pricing an asset, you're pricing a future event. On-chain analysts, ETF flow watchers, crypto traders, this is your native instrument. The market is always open. The crowd is always wrong somewhere. Here's the problem. There are hundreds of active crypto prediction markets running right now. BTC price forecasts, ETH staking yield markets, having cycle plays, Coinbase regulatory timelines, Binance liquidity events, SEC ruling contracts. The list is enormous. Most are efficiently priced. Smart crowd, deep liquidity, tight spreads. But a handful have information gaps. A new on-chain signal hasn't been priced in. An SEC filing drop that only a few analysts caught. Hashrate data points in a direction the market hasn't absorbed. Manually scanning hundreds of contracts looking for those gaps? Not realistic. That's the problem the scatter was built to solve. The risk-reward scatter is a single chart. Every active prediction market is plotted as one dot. You see dozens of contracts at once, no manual scanning, no opening each market individually. Just a visual grid that immediately surfaces where the pricing gaps are. If you've ever looked at a crypto chart and spotted an asymmetric setup, a low-risk entry with high upside, you already know how to read this. The scatter translates that exact instinct into the prediction market space. 2 axes. For quadrants. Let me walk you through each one. The horizontal axis, X, measures potential reward. Specifically, it shows how far the current yes price is from the estimated fair value. Fair value is derived from a combination of historical base rates, recent on-chain data, and liquidity-weighted crowd signals. The further right a dot sits, the bigger the gap between what the market is currently pricing and what the underlying data suggests the probability should be. Our BTC regulation contract at 34% with a 55% fair value signal? That dot sits far right. Large potential reward if the forecast plays out. Think of the x-axis as the alpha signal on the chart. The vertical axis, Y, is risk. It's a composite of two factors, liquidity depth and time to resolution. Liquidity depth tells you how easy it is to enter and exit the contract without moving the price against yourself. Think of it like checking DX depth before a swap. Thin liquidity means your own entry distorts the price. Time to resolution tells you how long your capital sits locked waiting for the event outcome. A contract resolving in 48 hours carries far less calendar risk than one running 6 months. Low on the y-axis means both deep liquidity and fast resolution. That combination defines low risk on this chart. Now you have the axis. Here are the 4 quadrants. Upper left, high risk, low reward. Thin liquidity, long time horizon, already efficiently priced. Hard pass. Lower right, low risk, low reward. Deep liquidity, fast resolution, but the crowd already has this one right. Fine for capital deployment, not for finding alpha. Upper right, high risk, high reward. Valid for experienced traders who size small and absorb calendar risk. And then there's the zone we're hunting. Lower left, low risk, high reward, deep liquidity, fast resolution, and a contract the crowd has significantly mispriced. That's the opportunity quadrant. Every dot that lands there is worth investigating. Last week, the scatter surfaced a crypto regulation contract sitting clean in the opportunity quadrant. Yes was priced at 34 cents. ETF inflow data and on-chain hash rate signals were pointing toward 55% probability or higher. That's a 21 percentage point gap. The contract had $761,000 in liquidity, deep enough to enter without significant slippage. Resolution window, 9 days. Low calendar risk. High reward signal. The dot sat clean in the lower left. Not every dot there resolves in your favor. Markets can stay mispriced. But the scatter gives you a starting point in seconds instead of hours of manual research across hundreds of contracts. When you find a dot in the opportunity quadrant, here's the workflow. First, click it. The drill-down view shows you the full market description, the resolution criteria, and the current probability curve. Read the resolution criteria carefully. In crypto markets, exact wording matters. SEC approves and SEC acknowledges are two completely different contracts. Second, check the liquidity depth chart. Healthy order books on both sides, similar to checking DX depth before a large swap. Third, size for conviction. A 21-point gap looks attractive, but markets can stay mispriced longer than your patience holds. Start small. Understand the market. Scale only if your on-chain thesis continues playing out. Here's what you now know. Prediction markets are probability contracts. They price future events the same way DeFi prices assets, through crowd-weighted liquidity. The risk-reward scatter is your scanner. X-axis, how much edge? Y-axis, how much risk? Lower left quadrant, where the opportunities live. You don't need to be a quant. You don't need years of trading experience. You need a tool that shows you where the crowd has left a gap, and the discipline to act only when the setup is clean. Head to PolymarketTrade, open the scatter, filter for crypto markets, and see what the crowd is mispricing right now. The link is in the pinned comment.